about this balancing act that these central banks have to do by trying to promote growth, but also trying to keep inflation in check? What does that mean for interest rate decisions in the next few months?
Well, I think it means the easiest thing for them to do in the next few months is to do nothing, because they were worried.
Seems to be the trend, right? Go ahead.
That's the easiest thing. They were worried about inflation 3-6 months ago, but obviously oil prices have come off and growth has slowed down, and so you can afford to wait and see for a few months. My sense is that probably when you get into next year, rates are going to start to go up again. I don't think the world's going back into recession, but I think if you're running a central bank, it makes sense essentially not to make a decision and just to delay for a few months, because there's no real urgency to move one way or another.
You know, in some ways, some of these nations that we mentioned that will have interest rate decisions today, Malaysia, Indonesia, very insulated, very domestic, demand-oriented economies, and very lucky in these global times, right? So don't you think they themselves need to judge what's happening in their country, and will they have to raise interest rates by the end of this year?
Well, Malaysia, of course, is quite an open economy. Exports a big share of GDP. So if you really do worry about recession in Europe, America, then there's going to be quite a lot of pressure on that economy. Indonesia a bit less so, but then they have a lot of commodity exposure, so there'll be hits if commodity prices come down. But overall, I think it's unlikely they're going to want to cut rates. Rates are already relatively low. They're below normal, so I think the underlying trend should be tightening, but just probably not for another 6 months.
Okay, so not for another 6 months, but we'll see any interest rate move then in Southeast Asia. Talk to me about the double dip. I'm sure people ask you about that. Are we heading towards recession again with U.S. and Europe leading the way?
I don't think we should be recession. I think it should be simply subpar growth. I mean, oil prices coming down are going to help, and the supply chain improvement after the Japanese earthquake, I think that will help as well. I don't think you should be too much into confidence indicators at the moment. They're going to be unavoidably terrible, just because of the panic and the market turbulence of recent weeks. I don't think they're necessarily a good, reliable indicator of the actual level of activity in the economy, such as they usually are.
Yeah, what about the play-out of the European sovereign debt crisis? Some are saying that markets moved higher in the U.S. We saw that rally on Wall Street because of the German top court passing, I guess, giving Germany the ability to help fund other countries that need a bailout. Do you expect us to see another country maybe needing one, maybe Italy, considering that's a big concern right now?
I think Italy's basically fine, as long as they can maintain bond yields 5-6%. I think they're fine. They don't have anything like the problems of Greece. And Greece is completely different. I think the problems in Greece really don't have a solution. The Germans can buy a bit of time by throwing money at them, but the problem's not going to go away. So I think in the end, I think Greece is going to have to default on the debt, because I don't think they have any way of stabilizing things under any sort of standard path of current policy settings.